Well, it's a brand new week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. First off, now let's take a look at what's happening in the news in the world of business today, starting with grains. Now, we see that Chicago wheat futures slid for a second session on Thursday with the pressure from expectations of higher seaborne grain export from war-torn Ukraine, which has eased concerns over global supplies. We see corn lost about ground, falling for the first time in 4 sessions, while soybeans ticked higher, although higher in the U.S. production and weakened Chinese demand, limited gains for that. The most active wheat contracts, the Chicago Board of Trade, we've lost about 0.7% to $7.70 for half a bushel. 4 more ships carrying almost 170,000 tons of corn and other foodstuffs sailed from Ukrainian Black Sea ports. That was on Sunday yesterday under the deal to unblock the country's export. We keep seeing more grains coming out of Ukraine with that deal. Moving on now, we see oil prices dropped today, hovering near multi-month lows as recession fears hurt demand outlook, and data pointed to a slow recovery in China's crude imports for last month. Brent crude futures dropped about 74 cents, about 0.8% to $94.18 a barrel in early trade. From month prices hit the lowest level since February last week, tumbling 13.7% and posting their largest weekly drop since April 2020. U.S. West Texas Intermediate crude was at $88.34 a barrel, down about 67 cents, extending losses after 9.7% fall last week. China, the world's top crude importer, imported 8.79 million barrels per day of crude in July, up from a 4-year low in June, but still 9.5% lower than a year ago. That's from data we saw from the customs there. Well, we're still looking at that oil market with that seesaw movement with the price. Now, coming back here, now we see the emergence of decentralized finance, popularly called DeFi. Stakeholders in the blockchain industry believe a disruption is coming for traditional and centralized finance. A conference organized by stakeholders in blockchain technology, that's CBAN, that was held in Lagos, is looking to find a convergence with DeFi, CeFi, and TradFi. Conversations also centered around fiat production in Nigeria and how the e-Naira helps with reducing the cost of producing the physical Naira. Do take a listen.
P2P here, the theme of this year's conference is CeFi, DeFi, and TradFi. Is there a need for convergence in the current divergence? What we hope to do is to have a roundtable conversation, an open conversation where everyone will be able to talk about the opportunities involved in CeFi, which is centralized finance, DeFi, decentralized finance, and TradFi, traditional finance, from a point of view of blockchain adoption. Of course, we know that Nigeria already has a national blockchain adoption strategy, but that has been limited because we see regulators mainly working in silos.
Today, the federal government of Nigeria spent a lot of money to produce our paper Naira. And we are having dwindling resources. Government have to sometimes maybe borrow money to produce those Naira in the real sense of it. Or use the Naira money that will have been used for other infrastructure provisioning to produce the physical Naira. So when we look at the cashless policy of government, it means that when we go cashless, then we will have saved a lot of money instead of using them to produce those paper notes. We got to produce the paper notes need to have some security features to prevent other people from being able to also produce those Naira notes. The security features of the Naira note have to be very sophisticated. But this becomes very irrelevant if we have to now have e-Naira.
And that was the P2P conference there, talking about the future of finance. Let's head on now to our first conversation. We'll be talking debt. For a while now, between January and April 2022, Nigeria made a total budget revenue of about 1.4 trillion naira, but paid 1.9 trillion naira in debt servicing. That's 120% of revenue going to paying back loan interest, with Nigeria's foreign exchange revenue declining, making it difficult to meet external debt obligations. What options pensions does Nigeria have at this time? Let's have this conversation now with Gbemisola Alunge, Senior Development Analyst with STAIRS, joining us right here via Zoom. Great to have you, Gbemi. Hello, Gbemi, can you hear me? All right, well, we'll try and get Gbemi. I don't know if you can hear me, Gbemi. Yeah, so we're still looking at Nigeria's debt to revenue ratio at this point. We're going to be having that conversation, looking at how, we can get more revenue into Nigeria at this time, making more dollars, because we're seeing, emerging economies struggle at this time. Let's see if we have Gbemisola now. Hello, Gbemi, great to have you. All right, we'll take a moment now. When we come back, we'll try and get that audio connection with Gbemi. All right, we're going to have that conversation later on in the program, talking about the Nigeria's debt to revenue ratio. But now we move on to another pressing conversation now with figures obtained from the National Pension Commission shows assets under the contributory pension scheme rose by 842.73 billion naira the first half of 2022 to hit 14.27 trillion naira as of the end of June. With rising cost of living squeezing households, what happens with pension contributions? For more, we have Tunji Andrews, CEO OABA, joining us right here in the studio. Great to have you.
Thank you for having me.
Yeah, so we see that new high, hit. We're almost hitting the 10 million mark, talking about pension contributors. How do you see that figure?
I think it's a testament to the work that the regulator and pension fund administrators in Nigeria have been doing. We must realize that the pension system as of today is less than 20 years old. So this 14 trillion plus has been gathered in less than 14 years. And coming from a low trust base, where we had a former pension system that was not just adequate enough to cater for an expanding economy like Nigeria, this has been a lot of work by PENCOM and the pension fund administrators. And I just think it's a great thing that Nigerians have been able to look beyond the failures of the past and trust a new pension system, and we're here today.
All right, and looking at the headwinds, we're seeing right now with rising inflation, we're seeing central bankers tighten rates globally. How do you see, this figure going forward? Do you think we'll still get contributors, because their incomes are being squeezed, at this point? Some of them can't even, eat the way they used to. Talk less of contributing to that pension.
I think one of the things we always need to look at is that pensions is not an investment in itself. It's a saving. It's a insurance against poverty rather than an investment to get rich. So it should not be confused with both of them. So I honestly think that Nigerians can't afford not to save for pensions, because, look at, if today is hard, where you can still go and hustle for your daily 2K. What happens in that period when you can't go out and hustle for your daily 2K? Imagine how hard that will be. So I do not think we can afford not to save. And if you think about the economy, think about the possibility of having 20 million aged people who are in poverty. 30 million. Can Nigeria's health system afford it? Can Nigeria's catering system afford it? So I don't think we can actually afford to ignore pensions.
So looking at, how, the pensions work at this time, we saw quite a number of contributors switch their pension, managers. And I'm wondering, how are the, PFAs handling all of this switching? Quite a lot happened recently.
We hope to see a lot more in the coming future. It's just the whole idea to be able to give pension contributors more control over their pensions. Prior to now, before the transfer window was opened, if you were signed up to one pension fund administrator, you had no choice. You had to stay with that pension fund administrator. If they were giving you not so adequate service, you just had to stick with them. Today, you don't really have to care whether the service is adequate or not. You might just like the other brand. You might just prefer the return on investment that the other brand is giving, and then you want to switch. So it gives pension savers more control over their pensions. And I think it's a great thing. It happens across the world. Why not Nigeria?
And how's that impacting their services at this time?
So it has, and it's a great thing. This is a fantastic question, because prior to now, a pension fund administrator could just simply do nothing. If you were signed up to me, you have no choice. You must contribute. It's a legal requirement. But now I have to speak to you. I have to call you. I have to check up on you. You know, I have to give you service. I have to give you an app. I have to give you more to make you stay with me, just the same way it's happened in the banking system. So the regulator has pushed this. So pension fund administrators now have to up their game to make sure that they keep their customers.
Quite interesting. And still talking about, you know, most of these headwinds we've seen, we've also had, you know, currency issues, you know, with most emerging economies in Africa. And, you know, with the dollar actually surging recently, that was, you know, seen more, you know, with African countries. We saw a lot of currency struggle. We've seen what happened, you know, with the Naira here. And I'm wondering, how can, you know, contributors still continue to save, you know, in their currency without that risk of losing out in value?
So here's the thing, and it's a thing that pensions savers should know. Devaluation is not a yearly occurrence. In 2019, for instance, the Naira was one of the best performing currencies in the world. So if you want to take 2020 in isolation, you would miss out the bigger scope of the fact that pension funds are not kept 1 year. They're kept over a period of 20 years, 30 years, you know, 35 years. So if you want to look at it as a case of diminishing returns, you have to also look at it in that stretch, to look at it over a long period. So if your pension fund is doing an average of 12 to 13% over a period of 10 years, you're still covered. You know, capital is still being retained. And I think that's what pension funds are being able to do across Nigeria right now. And I think pension savers are in a safe place. But I do hear rumors that the regulator is looking at, you know, more bullish investments for pension fund administrators. And I think when that happens, we will all hear about it.
Quite interesting. And, you know, looking at, you know, Nigeria's debt, we're going to have that conversation, you know, later on. But some are saying that, you know, the government shouldn't look at external borrowing at this time, that you can look, you know, into some of these pensions, you know, and that can actually help with economic development. But how do you see that, looking at where we are? We're not getting that much revenue.
See, and this is a personal opinion, by the way. I believe that the easier way for people to feel connected to their pensions is when they know that the pension fund was involved in the building of a train system, for instance. The pension fund was involved in the investment that built a hospital. The pension fund was involved in the investment that set up an IPP in your local area. That is a connection between the people and the pension. And I think that happens across the world. Right now, the regulator is, because of where we are coming from, very strict to where pension fund administrators can invest pension funds. But I think it is a place we should look at. And for us to even look at it, the government needs to come up with a robust investment plan for the pension fund and everybody else to plug into. So it's not a situation whereby the government says, give me the money, because that is not possible. But the government needs to look at investment, just the same way they go to the Eurobond market and, you know, pitch to investors. They need to come and pitch to the pension fund administrators and say, this is what we have, this is the plan of returns, and if you can invest in this, you will get this kind of returns. And I think that will work. Yeah,
that should actually woo them, you know, exactly. At this time. But looking at, you know, micro pensions, that's been another angle that they've been trying to drive, you know, at this point. How is it looking at this, you know, right now? Because we know the drive has been there since late last year. We've seen micro pensions, conversations about that. How is it really looking? Are they biting at this point?
I want to give a lot of kudos to the Pension Operators Association of Nigeria, PENOP. They've been doing fantastic work in trying to drive enlightenment, drive innovation in the system. And they've been very supportive to companies like mine, who recently just launched a chatbot over WhatsApp to be able to make sure Nigerians, wherever they might be, are able to get access to just questions about you know, what micro pensions is, and being able to onboard also on WhatsApp. And we're seeing more innovations like that. You will be able to see in the coming future dedicated payment platforms for pensions and micro pensions specifically. So there is a lot going on in the background to make sure that Nigerians, whoever they might be, wherever they might be working, are able to get access to this. It's a long road. Ghana has been able to successfully start ahead of us, and they've been ahead of us. But I think with what we're doing in terms of innovation, we would not only catch up with Ghana in a very short period, we'll be able to surpass them in the next 1 to 2 years.
And talking about innovation, now what else are you seeing, coming up in the future?
I don't want to, start to speak too much, but, like I said, one of the things we've seen is the chatbot over WhatsApp in the innovative space. But what we're particularly wanting to happen is for people to be able to interact with their pensions the way they interact with their banks. The way you open your bank app, you're able to move money here, you're able to do this, you're able to, speak to your account officer. We want that level of interactivity with pensions, and that is already in the works. Like I said, PenUp is doing a fantastic job. They're supporting people like us in the industry, and obviously in the next 6 months, you'll start to see those rollouts, and you'll be really, really proud of Nigeria's pension industry.
That'll be interesting to see. We'll keep tracking that industry to see how, because we have to, save for those rainy days,
It is a huge conversation, because what scares me is Nigeria has a population, the large concentration of our population is between 14 and 40. They're not going to remain 14 and 40 forever.
Exactly.
When they get to 60, 70, 80, it starts to scare you if they do not have any savings, to take care of them in old age. And look at the poverty levels now. Imagine that in large numbers in another 30 years.
And the squeeze is still squeezing, at this point with most of these headwinds. All right, thank you so much, Tunji Andrews, CEO Awaba. It was great having your perspective on the show today.
Thank you for having me.
All right, now let's see if we have Gbemi now. Gbemi, I was trying to get you earlier, but you couldn't hear me. Can you hear me now?
Yes, I can hear you.
Great to have you. Good to have you, Gbemi. So, this conversation about, Nigeria's debt level and debt to revenue ratio, and, not getting in, all that dollars or foreign exchange, we need, at this time. What do you think are the options here for Nigeria?
So we have to think about, how we got here in the first place. At the moment, Nigeria's debt servicing to revenue ratio, like you said, is higher than 100%. And that's because, first, we're not earning enough. Crude oil, which is the chief contributor of foreign exchange to Nigeria, crude oil prices declined in 2016 and 2020, and that just caused, a decline in our revenue, especially foreign exchange. So we also, were borrowing a lot, and we were not, cutting down our expenses, and that's what has brought us to where we are today. So I guess now that we're here, if we were to borrow some more, we have options. We could still, if we wanted to maintain our debt servicing, we could still borrow. We could request for a restructuring of the debts that currently exist. And then we could also try to, ramp up our revenue some more, foreign exchange revenue, either through exports or investments or just, I guess, more borrowing. All these are expensive, especially if you want them to happen in the short term, but they're not impossible.
And, talking about cutting expenses, at this point, as the federal government, where can we look at, talking about cutting expenses?
So one thing that we haven't done in the longest time is Nigeria has failed to realize that we can no longer subsidize a lot of the energy and power and petrol that we've been subsidizing for the longest time. Nigeria cannot sustain it anymore. So if we were to cut down expenses, that would be the first place to. And the best time to do it would have been, in pre-2016, before oil prices crashed, or after 2016, between 2016 and 2020. Now it's going to be a lot harder to have that conversation, but the government can no longer sustain the subsidies. So that would be the first thing. Also, we have seen calls for the government to reduce the public service, let people make the public service more productive and more efficient. So cut down on personnel costs, which takes up a significant chunk of the government's recurring expenditure. We also need to look at, I guess, looking for ways to reduce excesses. It's not time to buy cars and buy flashy homes for anybody. Nigeria cannot afford it anymore. So it's actually time to, those are the areas that we can look, those are the low-hanging fruits that we can look to reduce our expenses.
Yeah, because I saw recently the Kenyan parliament, they, stopped, there was a proposal to stop buying cars for members of parliament, that they can buy the cars, by themselves if they want to. I guess that's one angle we can also look at. But, it's a tough place now for most emerging economies. We've seen, currencies actually lose value at this time with the strengthening dollar. But I'm thinking for emerging economies like Nigeria, what do you think we can do, at this point from a currency angle, to help with this dollar shortage?
The reason why we have a situation, a currency crisis at the moment, is because we have a managed float system. So the central bank, tries to maintain the exchange rates, the official rate at least, at a certain level, and uses the foreign exchange reserves to sort of back that up. That's no longer sustainable because we're not earning enough. So last week or 2 weeks ago, when the CBN summoned, the Senate summoned the CBN governor to, ask for a reason for the exchange rate crisis. And according to CBN governor, the reason was that the NNPC was no longer remitting forex to CBN. And I mean, you've seen, although the NNPC came out to say that they had remitted 2.7 billion, by the time you weigh that against the income from the NNPC in previous years, prior to 2015, the NNPC was remitting about 3 billion or more per month. And now the NNPC is remitting 2.7 billion in 6 months. That's quite alarming. So that's why we're here today. If we're to then decide to sort of restructure or, we can, all that's to say that we can no longer maintain the exchange rates at a certain level. To maintain the exchange rates, you need to either have like a super buoyant foreign exchange reserve that you can sort of use to plug in supply when demand is high. We don't have that. So it's time to actually let the exchange rate go. And what that does is it gives foreign investors confidence in the economy to a large extent. So investors do not want to come in today and hear that, exchange rate is 410 today, tomorrow they have to buy from the black market, the day after. It causes some inconsistencies and it distorts planning. But if the government, if investors come in and they know that, the exchange rate is market reflective, is reflective of demand and supply, they'll be able to make decisions, and that would, and that would also inform how liquidity would be and all that. So I think that it's time for the central bank to loosen its grip on the exchange rates because, it can no longer maintain it.
And at this time, what type of borrowing do you think, if we're still going to keep borrowing, where should we be looking? Should we still be looking at the external, or should we look at more borrowing down here locally?
First, I don't think we should be borrowing as much as we should, as much as we currently are. Nigeria's external debt has increased by 3x. We tripled our debt in just 6 years. It's so alarming. The last time this happened was I don't even think we've done it at this speed in a very long time. In 2004, when we needed like a debt servicing or debt forgiveness, we were owing over $30 billion, and that was cumulative. That was from like 1985. So our debt multiplied by 4x between 1985 and 2004. This time, between 2016 or 2015 and now, our debt has tripled. So first, we need to pull the brakes on the borrowing. And I know that sounds more easier said than done, but it's important now that's why we're talking about the government sort of reducing its expenses. But if we were to continue borrowing, we have options. We have the multilateral organizations. To borrow from them would require, implementing some stringent austerity measures. IMF would not give you money without you putting your house in order, putting your fiscal situation in order. We also have the capital market. That's also quite expensive. The federal government has tried to issue Euro bonds this year, and they've seen repeatedly that price at which the interest rates that the market is requesting for these Euro bonds are quite high. And that's because investors do not believe in the Nigerian economy as much as they used to. So if they're going to borrow from the capital market, we need to be ready for, we can do long-term bonds that would come at higher than usual interest rates, but we need to be ready to pay. That means that our debt servicing will continue to increase if we decide to go that route. If we're to borrow from CBN like we're already doing, I do not subscribe to that. It will just continue to bloat. It will continue to make inflation higher. We're seeing the CBN, and it just questions the independence of the CBN. The CBN cannot continue to give money to the federal government to manage its budget deficits. And even at that, if you're borrowing from the CBN, you're not borrowing. It depletes if the CBN is lending at the domestic. CBN is lending in Naira, it causes inflation. If they're lending in dollars, it depletes our foreign reserves, reduces money for debt servicing, reduces money for imports. There's just so much. Right now, we don't have enough room. But thankfully, multilateral organizations would always come to our aid. Like if anything happens, they're always happy to help countries that are struggling with debt. But if they're going to come to our aid, we need to be ready to unify our exchange rates, to remove petrol subsidies, to cut the civil service, to make all these stringent measures that would impact the Nigerians like you and me significantly.
And it's quite interesting. We saw that headline that each Nigerian owes about 200,000 naira if you split it, between people. But at the end of the day, this is a pre-election year. There's a new government that's going to come in, next year, and this debt issue would still, be hanging, over our heads at that point. But what do you think are the options for a new government?
So what the new government needs to understand first is how we got here. I earlier mentioned that we're not earning enough. We were not cutting down on our spending. We're borrowing too much. So first thing the government needs to understand is it's important to bring in foreign exchange. Foreign exchange needs to come in either through investments, through exports, through remittances. These are sources that would not deplete or impact Nigeria negatively. Investment at the moment is difficult because we've seen, with developed countries taking contractionary monetary policy measures to reduce inflation across the world. People are more willing to give their money to a US or the UK than Nigeria. So we've witnessed this capital flight. We witnessed it in 2016, also saw it in 2020. So it's important, like the government coming in needs to make Nigeria look like the best place to invest. And that involves putting things like security, power, and some other significant issues that make production and make business in Nigeria expensive. They need to put those things in order. So those are the first things that you need to do. Ensure that try to make Nigeria an investment destination, either by inviting people, by, taking advantage of the different free trade zones that we have across the country. We also need to export. Right now, we were seeing how, we are seeing how Europe is looking for alternative sources for gas imports and things like that because, the sanctions on Russia is preventing them from getting as much as they usually would. So this is the time for a country like Nigeria to sort of plug in. Like now is the time to, look attractive for exports, and not just exports of like raw materials, but looking to export things that are actually required. Things like even palm, right? Indonesia at some point had paused palm exports. They resumed again. But then these are the different areas that, we should be plugging in. And what that means is if we're going to export, our port situation needs to be sorted. It's at the moment, exporting goods out of Nigeria is quite burdensome. Like it's a lot of stress to actually try to sell your goods out of Nigeria. So port issues need to be sorted. There needs to be a seamless flow of goods and goods out of the country. So we need to also sort that out. Remittances have declined because people. Another thing about, seamless flow of funds into the country and out of the country, we've seen people prefer P2P measures of sending funds home instead of the actual official channels. We need those funds to come in through the official channels so that the government can make use of it and so that CBN can have access to it. Without that, we won't be able to. So we still have options. The new government coming in still has options to, make Nigeria the best investment destination, maybe in Africa,
right.
Encourage exports by easing the flow of easing the bottlenecks at the ports and even unlocking. I think the NPA has done a good job in unlocking other, I'll call them moribund ports across the country in Calabar, in Warri, in I think Cross River and Rivers. So now is the time to sort of take advantage of those ports, make Nigeria's, make the flow of trade of goods and services out of Nigeria easy, and then just make remittances easier to
quite a lot of work. Quite a lot of work there, seeing for the new government, to do. But
Olani, I can't hear you anymore.
Can you hear me now? How about now? Okay, I guess, okay, maybe can't hear me anymore. All right, Gbemi, I'll talk to you another time. We'll try and get Gbemi again to continue that conversation. But at the end of the day, the next government has quite a lot to do to make Nigeria look more attractive to investors at this time. All right, now, let's take a look at how the market is looking. We have Ini joining us right here. Ini, great to have you.
Hi,
you're on that side this time.
Yes. There has to be a change every time.
Exactly. How's the market looking?
Well, Ladi, let's find out.
Right.
Well, let's start with the FX turnover. Last week, we did see that there was an increase in the FX spot derivatives, and week-on-week change also, we did see a change of 15.16% at the end of the week. That's for the FX turnover. And then for the NAFEX, unfortunately, the Naira shed 0.23%, even in the NAFEX window last week. That's what we saw. Well, let's go to the fixed income market now, starting with the federal government bonds. Federal government bonds for Friday. This is not weekly. This is for Friday. Only had 5 deals worth 4.8 billion Naira. Moving over to the Treasury bills. The Treasury bills had just 2 deals. This market has been really quiet. And then CBN bills had 6 deals for Friday. Very quiet there. I don't think we have seen the impact of the FAQ that was released last time. And then for the OMO, that's the open market, there were 4 deals in that market yesterday. Been really quiet. And of course, the story here is that there's been this liquidity squeeze, which is not just in the market, but everywhere. So of course, if it's everywhere, then it's going to stream into the market at the end of the day. Well, let's go to the NASD market and see how that fared. And that was also in the negative at the close of trade on Friday, almost 3% down at the close of trade, but still holding really tight. I think this market is really sentimental and has a bond with 1 trillion Naira. So it's either a little bit over 1 trillion Naira and then it goes back and sticks at 1 trillion Naira. We're looking for one of these days when it will report much higher than that. And then looking at the activity on the NASD, there were stocks traded, just 9 of them, valued at 304.04 million, and the volume was 1.7 for last week. Advances for the unlisted market, City Trust and Niger Delta Oil and Gas, they're making some moves there in the unlisted market, as well as City Trust Holdings. The decliners, Friesland Capina was #1, and then NASD itself did decline. Top trades were the Niger Delta Explorer, top top trades for the NASD was actually the Niger Delta Exploration and Production Company. From there, let's go to the equities market and see how it fared. I guess this is the most interesting market for me, at least. All share index ended in the positive, and this is just because of one positive trade. That was on Friday. 4 negative trades, 1 positive, and there we see that the market ended in the green last week. Equities cap was 23.358 trillion naira for the week. Activity for the week, the activity date was all in the red. Volume, value, deals, everything was in the red because we had more negative trades on that day. And then let's look at the sectors now as here it performed. Banking, always a darling to a lot of investors, catches the eye just out there, very active. It gained 2.63. Consumers also went up there. Boa Foods was a major driver last week for that. Industrial goods lost 5.76. Insurance was also down 0.37. Oil and gas, well, if there's a windfall going on somewhere, then at least we should expect that some companies here. So let's look at the top gainers for that. Japo Gold, Oil and Gas, Honeywell, Consumer, and PZ Cousins. They were the top gainers, while the top losers were MC Nichols, Learn Africa, and Boa Cement. Boa Foods did it well, but Boa Cement actually made it to the top losers, while top trades for the week had, there you go, the banking sector, always a darling, as I said, catches a lot of eyes. Even you, I know, watching there. I'm sure if you wanted to get into the markets, you'd be looking at the banking sector. GTCO, Zenith Bank, and FBN Holding, they were the top trades for the week last week. Ladi, I don't know if we have Ramat Baba to tell us some of the backstory of the market. All right, so Ladi, there you go. The market is not too changed.
Right.
It's still the same. But, you know, the power of one positive trade, actually, I don't think I can get over that.
Yeah.
Just one positive trade in the equities market, and then the market ended in the green, you know, for the week. That was really
quite
unexpected.
Yeah, I've seen that happen before.
It happened the previous week,
week, and it's interesting seeing that happen, you know, over and over again. But
you know, when I was talking to Ladi on Russia invasion, and he asked about the markets, and then he now asked me to predict if this Friday will be another green. I think that's kind of difficult because
you can't predict it.
Yeah, because analysts believe that the other one was because it was the end of the month.
Right.
So closing of books and activities led to that, and then of course this is the first one. But now I guess investors are settled, and then we'll just follow the trend and see how it goes.
We see earnings actually, you know, coming in, trickling in. That would also.
How come? Are the earnings really having that much impact on investor sentiment now?
It's like investors are just looking away at, you know, some of these good, you know, numbers we're seeing, but it's not really, you know, impacting on the share price at this time like we see it in other markets.
Exactly, and you know, during capital markets on Saturday, I had Mr. David Adonri, and we talked about the fact that, I mean, you can see the top trades, you can see that the banking, they're always there.
Financial institutions.
Yes, they're always there. Investors are very interested, but that has not translated to an increase in the value of their shares.
Right.
You know, so we wonder, I mean, he suggests...
But I'm sure at some point we're going to see that happen.
It will, right?
At
when they
some
win
point.
enough investors' trust.
Exactly. And you'll see them, you know, buying all of this stuff. But I think you have Ramat now.
Okay, all right. I think Ramat is there now. Ramat, good morning. Can you hear me?
Yes, I can. Good morning.
Awesome, awesome. But the fixed income market is not awesome at all. Ramat, what's going on there? What are you guys doing to the market?
Okay, so there's been reduced activities in the fixed income space. Last week, we saw more activities in the treasury-based space, and that's majorly because of the liquidity that came in from the FAC inflows last Monday. As a result, we saw a few banks buying or picking up the short-end bills in a bid to use up their liquidity to avoid having any excess liquidity. It's just the fear of CRR that is guiding most of these banks in their liquidity management. On the bond side, not much has been happening. Markets actually expect yields to go higher, but everybody is waiting for the auction next week. So that should set a clearer tone for direction. Clearly, we know the direction is up, but how high is it going to go? Market isn't really sure, so everyone is really trading cautiously.
So if we were to have this conversation next week, Monday, Ramat, what direction do you think our conversation will be going?
How high probably do we see the yields maybe? Because already market knows yields should be going higher and everybody is preparing for that. We see a few short selling across the curve and all that, especially on the auction bonds. So if we're having this discussion next week, we'll probably be looking at how high market has gone.
All right, Ramat Baba Fix, Chief Dealer with FSDH Merchant Bank. Thank you so much for sharing your thoughts with us. And we do wish you a profitable trading week as it is. All right. So, Ladi, I think I'll leave the space for you. That's it. I'm done with the markets.
Right. So we'll be watching out for how, the markets close this week. Hopefully we see some more greens in the equities market.
Don't get your hopes up, Ladi. Don't get your hopes up because, I mean, everywhere we see the squeeze, the liquidity squeeze, not just in Nigeria, in the UK, in the US, in Europe, Germany, everybody's adjusting. These are the realities of our times.
Right.
So,
well, we'll keep tracking the markets to see how it all plays out. Thank you so much, Eni.
Thanks.
All right, now we're going to break now. When we come back, we head to London. That's in a moment. Just stay with us. This is Business Morning. Welcome back. Still watching Business Morning. Now we head to London. We have Juliana standing by right there. Great to have you, Juliana. Good morning. Fresh, brand new week. Great to have you. So I saw a headline this morning about businesses in retail and hospitality and leisure sectors were given business rates holidays, but others outside this were exempted. Tell us more about this.
Yeah, good morning, Laddie. It's pretty difficult to believe that it was over 2 years ago now when the former Chancellor Rishi Sunak, who is one of the leading candidates to become Prime Minister, dished out a handful of goodies to individuals and businesses who were told to shut the shops and not go to work. So we had the furlough scheme, didn't we, for employees? And then we also had a business rates holiday and VAT cut for businesses. But because it was so intricate in details, there were hundreds and thousands of businesses that didn't fall within certain sectors that were unable to get the support. A few months later, the Chancellor then dished out £1.5 billion for these businesses. But rather than the government allocating that money, it was the job of the councils across the country. Now, Gerald Butler Gerald Eve, I do apologise, is a real estate advisory firm, and they've been conducting some background research on just how this money has been dished out. And what they have found is that there are still tens of thousands of businesses that have not received this money. We didn't really hear anything or any response from local councils as to why this hasn't happened. But we do know that sometimes these systems are just full of bureaucracy and checks and balances that businesses are just unable to provide. And I think it's a really important point at the moment to highlight, because of course we know we're going through a very severe cost of living crisis that is only going to get worse. We discussed last week, I believe it was either with you or Eni, about how many businesses are collapsing in the UK at the moment now that the government has pulled away COVID support. But you can imagine how those who didn't receive the COVID support, who were supposed to receive it, are feeling and faring at the moment, particularly at a time where, of course, a government is not sitting. We don't really have an active Prime Minister. I believe he's on holiday, and things are going to get worse. So very interesting report that's been highlighted by Gerald Eve, that there are tens of thousands of businesses who are supposed to get support to help them through the former crisis that still haven't had the assistance.
Quite interesting. Businesses, households, all needing support at this time. All right, so it's a new week. What market-moving data are we expecting?
It is a new week. I think the big one has got to be Friday GDP data, really important, especially because last week we had that pretty sombre forecast from the Bank of England that inflation currently at 9.4% will reach 13% by the end of the year. We are going to be going into 5 consecutive quarters of a recession. Not great. And it looks like it will begin this week. We are going to get GDP data for the month of June. Month on month, we're expecting expecting GDP to have declined by about 0.3%. And now the quarter, really important, that second quarter between April and June, we're expecting to see declines of about 0.1%. However, the quarterly data that we're going to get on Friday is only a preliminary reading, so it's forecast at 0.1%, but it could be much more difficult, and we can expect those contractions as the squeeze takes hold for more months to come.
Right, the squeeze keeps squeezing at this point. Thank you so much, Juliana. We'll catch you at 1:30 for more. All right, now let's take a look at how the markets are looking. Talking about the crypto market there, look at the Fear Greed Index. It's 30 points. It's fear in this market. It's still fear that we're seeing right now, better than extreme fear that we've been seeing for the past couple of months. So right now it's 30 points. Market is looking quite green, you know, this morning. Let's look at the market cap. Now we see it's about $1.2 trillion. That's up about 2.77%. Volume traded in the total crypto space, $44.63 billion, up about 4.02%. And we see Bitcoin dominance sitting at 40.46%, up about 0.01. Let's look at the price of Bitcoin this morning. We're seeing quite a big bounce there from Bitcoin this morning. It's up about 1.22% at $23,685. Over the weekend, I saw Bitcoin there got to about 22,000. We've seen that range over the weekend, and now we're seeing Bitcoin make a big move this morning. We'll see if it's going to get to that 24,000 level. Volume trading in Bitcoin, $17.58 billion. Let's look at Ethereum there now. It's at $1,700. Had that big move also over the weekend, and last week is up 0.65%. The king of the altcoins looking quite strong, like he wants to get back to that $2,000 level. We'll keep watching and see how that plays out. All right, let's bring in Uzo Chukwu now, Mbamalu, digital market analyst. Great to have you on the program. Good morning. Hello, Zochukwu, can you hear me? Hello, Zochukwu. Okay, I guess Uzo can't hear me at this time. Let's look at the top alts by market cap now. BNB, $328, up 0.70%. We're seeing BNB now holding strong above that $300 mark. It was trading at about $200 and some for the longest time. We see Cardano, 54 cents, up 0.93%. And we see eCash also doing pretty well this morning. It's up 2.18%. XRP is still holding strong to this 30 cent level. It's been here for a while now. This was a coin that was trading over $1 for the longest time, but now we're seeing XRP and that downtrend, and we know they have that issue with the SEC. They seem to be winning that case, and we're seeing that, you know, reflected in the price there. It's holding strong. Some traders are hoping that XRP is going to go on some kind of run, you know, at some point, but it remains to be seen how that SEC tussle plays out. Let's look at the top 5 gainers this morning there. We see Rose there. That's 10 cents, up 24.30%. And Flow token there, $2.97. Had quite a nice run. This period is up 11.14%. We see Pancake Swap also having quite an interesting move. This was trading about $2 a few weeks ago. Now it's at $4.57. That's the decentralized exchange with the token Cake there. It's up 10.51%. Eyes are on this token right now. The last high it got to over $20, but now we're seeing with that market downturn, we're seeing Cake there trading at $4, below $10, which it was for the longest time. We see Rune, $2.95 there, up 10.28%. And we see Mina token also trying to get that move there above $1. It's 91 cents this morning, up 8.29%. Talking about Mina token. Let's see if we have Uzo Chukwu now. Hello, Uzo. Do we have you now? All right. No Uzo yet. Okay, let's look at the top 5 losers. See Decred there. Decred, this was trading over $100 for the longest time. Now it's trading at $37, down about 7% this morning. Kasama at $65.43. It's down 1.90%. We're not seeing double digits losses this morning because we're seeing traders actually making profit when it comes to getting into these altcoins. And we see Leo token, $4.89. It's up about 1.87%. MIOTA, that's about 34 cents there, up 1.42%. We see BUSD, $1. This has not lost the peg. Nobody wants to see BUSD lose the peg to the dollar like we've seen with those other stable coins that lost their peg. But we're seeing BUSD, USDT, all of them still holding on quite strong, but it's down 0.02% this morning, showing that traders are moving away from the stable coins, trying to get more of their flesh into the altcoins to see if they can, grab some of that profit. So it's quite a mixed market we're getting at this point. We're seeing traders, hoping that this trend we're seeing with Bitcoin will continue at this point, because at the end of the day, we still have market moving data coming out this week, talking about, we saw that U.S. jobs report that had an impact on the market, and we're seeing if the Fed might actually look at raising rates at this time, because you're seeing a healthy jobs report that would translate that the economy is still strong and there's still demand at this point. So it remains to be seen how it plays out and how Bitcoin holds with all of that data coming out of the U.S. All right, that's the market, and don't forget to join us at 1:30 p.m. for Business Incorporated. We'll be here again at 1:30. Don't forget that, and also don't forget we have more market moving data coming out this week, and we're going to be taking all of that and drilling on all of those data coming out. Thank you so much for watching. Don't forget to watch us on YouTube. You can also subscribe to our YouTube channel if you want to watch the video all over again. Thank you so much for watching. I'm Ladi Williams. Bye for now.